This is Eric Muathe with Muathe.com. It is Saturday, July the 16th, 2011, and we're going to take a look here at some stocks, some sectors in the US market, and then look at some world markets to see how they close for the week. I'm going to start off here by taking a look at three financial stocks, and they are Goldman Sachs being the first one. And what you see here is a stock that has been on a downward trend for a couple of months now. It's been bouncing off this channel here and closed very close to its 52-week lows. Now it did touch its new 52-week lows about 3 weeks ago. That is Goldman Sachs, but I don't see anything in this daily chart here that tells me that this stock is about to bounce. And anyway, if it's gonna bounce, the first thing it's gonna have to do is move above this channel here, which it's been trading below, and we also would like to see it challenge the now downward dropping 50-day moving average. So there's gonna be some resistance. I don't see it getting out of the way or moving the strong sustained rally for a while, because the charts don't favor that kind of action. We also see now that the 200-day moving average is turning and facing lower. So we start off the video here for the weekend analysis, and the first thing we see here is that still some of the stocks that have been trending lower do not seem like they want to give us any entry or buy points. We'll see how the next couple of weeks shape out, but from what I can tell from this action here, Goldman Sachs is still in a downward trading channel. If you take a look at Goldman Sachs from a monthly chart, this being a 3-year monthly chart, what we see is that the stock is now challenging its 2010 low monthly closing lows, and it's trading right at the monthly closing lows right now. So again, the monthly chart does not seem to give me any buy signal at this present time, so I would not be surprised to see the stock trend lower in the coming weeks and months. Now if we take a look at Goldman Sachs from a weekly perspective, we see that again we are back at 2010 lows. We are challenging the 2010 closing low of 130.19. So that was the low on a weekly closing basis in 2010, and we closed just a couple of pennies below that, but that's pretty much just closing at the lows. If we get another push lower here, this thing is gonna be trading pretty much in the 2-digit dollar area, because my price target about a year ago was for Goldman Sachs to trade in the 70s sooner or later. And then we also see that the moving averages have already given us a sell signal in terms of the bearish crossover, and these moving averages are all pointing lower. And until this stock can move above these moving averages, it's not gonna be heading higher. Like you can see, it had a nice move here beginning of 2009 is because it moved above the moving averages like it did, as you can see here, and once it started, and again it had a nice little move here once it moved above the moving averages in the September-October time frame of 2010. So as long as it remains below the moving averages, you expect the resolution of the pressure to continue being to the downside. Let's take a look at another bellwether stock, and this is Bank of America. Closed at a fresh 52-week closing high. This one was all over the media, but closed at $10. I think this one is going to be a single-digit stock for the most part. For the second half of 2011, it's been a bearish chart for a long time. You can see that the 200-day moving average turned bearish around here, right there, and that was May, June, July time frame of 2010. And you can see that it's been pointing lower, and that's a 200-day moving average. It's been pointing lower since then, and we have a downward sloping 50-day moving average. All those are indications of a bearish environment, and the stock can only start correcting those, but it's gonna take a lot of work and muscle. If we take a look at Bank of America from a monthly perspective, we see now we broke down below 2010 monthly closing highs of $10.92, and this is a breakdown of, instead of a breakout, we have a breakdown bearish development in Bank of America. And if this is the chart that we're going to be considering, then one has to default to that this stock is going to be seeing lower prices. A very bearish chart, unless it can immediately recapture this by the end of the month, recapture this $10.92 close that it had in 2010. Needless to say, this is a bearish chart in Bank of America, and I would not be surprised to see it trading in the single digits again in the coming weeks and months. This is Morgan Stanley here now. We're looking at a daily chart. You see that the stock's been trading in a downward channel over the last, since beginning of this year pretty much, and recently we bounced off this top line of the channel, which also happened to be an area where the 50-day moving average was, and we decided to resolve to the downside. That's bearish, and bearish charts always tend to have that kind of reaction. So this here was an obvious area where the stock was going to find natural resistance. We closed at a fresh 52-week daily closing low, fresh 52-week intraday daily closing lows, and I don't see anything in this chart that tells me this instrument is about to rally. Again, you can see even the on balance volume, which is a measure of the volume or institutional accumulation. Here we see institutional distribution, in the sense that institutions are getting out of the stock and they don't want to be owning it. Again, the only way the stock can really recover is if it starts moving above this channel, above the 200-day moving average, above the 50-day moving average, which are all pointing lower. So there's a lot of work that this stock has to do if it is ever going to be back as a strong bullish stock, and I don't see that in this chart. If we take a look at Morgan Stanley from a monthly perspective, we see that it broke down. The monthly closing low was about $24, give or take $23.50, and it's now trading well below that 2010 monthly closing lows. That's a fresh break, and honestly, everything in this chart tells me that this one is potentially going to be seeing much lower prices in the coming weeks and months. Morgan Stanley is another sell a signal stock unless it can recover by the end of the month. Now if we take a look at the Dow Transportation, Dow Transport, we see that over the last 2 weeks it's formed a new weekly closing high, tried to break out, could not hold this breakout, as this week it has moved back below the former buy point of 5,514.84. So it's back below that. That's a sell signal in unto itself. But what is more interesting is that as the stock was making new daily closing highs here, we see that the technicals did not follow suit, and I'll show that to you in a second here. See that the technicals, on the other hand, the RSI was showing that there was no strength in that move, and so that's what they call negative divergence, and that is always going to be a sell signal. So again, so we see even the Dow Transports are giving us signs that this is not a very strong, like you can see here, making new highs on a weekly basis, but the RSI was not corresponding. We are making lower and lower RSI sentiment moves. That negative divergence is going to resolve one way or the other, more than likely to the downside. Now if we take a look at again, you take a look at the IYR, which is a real estate index, we see the same thing. We made new weekly closing highs in the last 2 weeks, but the RSI action was not good because the RSI was lower than the prior high. This is negative divergence that usually is going to resolve to the downside. Also take note of the fact that the RSI here, if you follow the red line right here, we moved below this level here, came back and are back testing this line here, and we might be potentially moving lower. But for this chart, what I wanted to show you was that this move here with the prices going to new weekly highs and the RSI not corresponding is a bearish development, and also moving back below the former buy point. So the real estate market also is giving us a bearish scenario. I'm gonna continue this video for my subscribers, but that's all for the free portion. If you wanna watch the rest of the video, that's all you need to do is just log in, take the free trial, and you can watch the rest of the video. This is Eric Mwathe, and I'm going to continue here for my subscribers.